1. What's good, YouTube?
What's up, guys?
What's poppin'? We out here. This is the very first episode of Young and Hungry. Where we out here. It's pretty self-explanatory, pretty much. I'm out here with my boy Successful Sanele. You know what the vibes.
I really design here, man.
You know what I'm saying? Bro. Yes, sir. This is my brother since way back. We're gonna give y'all the backstory in another video.
Oh, and by the way, I'm wearing a Successful t-shirt, bro.
You know what I'm saying? That's already the culture.
Representing.
Always gotta represent.
Oh, yeah,
stay focused. You know what I'm saying?
Motivated.
All day. You know what I'm saying? So we're gonna be talking about a few things that are not communicated or are not discussed in school. You know what I'm saying? Amongst those things are the Cashflow Quadrant. We're going to be talking about stocks. We're going to be talking about foreign exchange, also known as Forex. We're going to be talking about financial statements and costing. This is a lot more.
Yeah, there's a lot more to speak about.
Yeah.
And it's quite intriguing that we brought up certain things of financial literacy and stuff like that. So it's very important for people to listen to those kind of things and get some knowledge on what is not being taught in school. And I'm very proud to be in this video with you and having to discuss a few things about it and share it with the people. So yeah, let's get started with it, bro.
Yes sir, let's get started. Let's start with Cashflow Quadrant, bro. Can you explain to us what the Cashflow Quadrant in under 5 minutes?
Right. The Cashflow Quadrant basically is if I had a pen and a paper, I'd write it down so that people would see.
We can clip it into the video afterwards. You can write it down and clip it into the video.
Okay, so basically the Cashflow Quadrant is it all starts with different incomes, right? There's 3 types of income, which a lot of people don't know, right? There's earned income, there's portfolio income, and there's passive income. Right? Earned income is money that you work for. Basically, if you're a teacher or if you
nurse or
anything, yeah, that's earned income. You get income by doing those type of things, working for someone, basically, right?
Like a salary.
Exactly. Then portfolio income is like your stocks, just like you said, like foreign exchange and stuff like that. EFTs, and
I'm thinking ETFs.
Yeah, ETFs.
Yeah.
ETFs, my mistake. Then passive income is your real estate, right? And the Cashflow Quadrant is divided into 4, right? There's the E, there's the S, there's the B, and the I. E stands for employee, S stands for self-employed, B stands for big business. What I mean by big business is 500 employees and more. Then I stands for investing, right? So I also know the tax laws regarding each quadrant, each letter of the E and the S and the B and the I. Right? For the E, the tax payments is like approximately 40%, and the S is 60% self-employed, right? Like your doctors, right? Then B is like 10% big businesses, and I, which is passive income, is 0%. So that's why the rich get richer and the poor get poorer. And
this is according to Robert Kiyosaki, right?
Yes, according to Robert Kiyosaki, guys. I think you should read the book Rich Dad Poor Dad. It explains more in depth about the cash flow quadrants and the definition between assets and liabilities, which we're going to be speaking about just now.
Yeah.
But what I want to say is the cash flow quadrant basically is divided into 4. The E and the S goes together, and the B and the I goes together. And the rich people, the successful people that we look up to most often, they focus on the right hand side of the quadrant, which is the B and the I. They don't focus on the E and the S, right? So if you guys are looking to become business owners one day, or investors, I think you should focus on the B quadrants and the I quadrants, right? So that's what it is, bro.
That's powerful.
Yeah.
That's powerful. And also, if you're reading this, like, keep this in mind. Like, we get this information, we learned it from, shout out to Robert Kiyosaki. We'll try to add a picture of him here. he's based in America. So some of the tax percentages are based on American tax percentages. You can do your own research for South African tax.
But it's mostly related somehow.
Yeah, more or less. Yeah, definitely. Yeah. But do your own research. Yeah, and I'll be talking about that's Cashflow Quadrant. I'll be talking about stocks. You know, shout out to Malusi Purple Shepherd. Shares. He's one of the first dudes in SA to introduce stocks and introduce me to stocks that I actually met. Another person is Wall Street Trapper in America. But basically, stocks. Shout out to Wall Street Trapper as well. Shout out to the both of them. You know what I'm saying? Basically, though, stocks are a portion of ownership in a company. So it's another word for it is shares, right? So if Made by Ari becomes a public company, shout out Made by Ari, that might happen in the future, you know. But if it becomes a public company and the total number of shares that I have are 100 shares, and each share is valued at 1 rand each. If you buy 5 rands worth of shares, you own 5% of that share, of those shares. You can do more research on this, of course, but there's also, it gets better because of platforms like Easy Equities, which you won't learn in school, and it's been around, if I'm not mistaken, I'm willing to be corrected, since 2012 or before 2012.
But
Easy Properties, which comes into it now, it's new. But like the concept is this: they make it easier and they introduce something called a fractional share. A fractional share is where you can buy a percentage of a share. So in that same Made by Ari example, if it's 1 rand per share, but you don't have 1 rand in Islanu, you know, for my non-Zulu speaking audience, you have 50 cents. You can still put 50 cents and you will have half of the share, but you'll still be an owner in the company. So that's how people get into companies that are huge, such as Google, Amazon, Capitec, a whole lot of companies. Basically, you don't have to start. This is the misconception that we're gonna fight, and one of the things we won't be taught in school. You don't have to buy full shares to start and to be an owner. You just have to commit a portion of your income towards investing. It's almost similar to the principle of tithing, where you know that you have 10% going towards the church, if that's what you believe. That's what I believe personally. But the same principle applies in investing, where a percentage of your income, you can now allocate that towards investments and invest into the future. And that works pretty well, because if I sell the lollipops, then if I make 2 rand or 50 rand profit, and I know I put 10% into investments, then that's 5 rand that I'm gonna be putting into a stock. I'm so sorry for the non-English speakers. Will be like, that's just 5 rand. What it's gonna do? Well, it's gonna do a lot. Time moves. Right now, as you're watching this video, right now as we're shooting this video, time is moving.
They say time is money, bro.
Time is, you know what I'm saying? So I'm probably gonna be using that same 5 rand that I'm not investing to buy food or something that I'm gonna excrete or urinate within a week, and then that money is gone. You know what I'm saying? So like, the point that I'm making is, instead of doing that, have build that culture of investing, of being an owner, step by step, starting where you are at, not where you wanna be. And yeah, you can definitely get all the way to the top. I think the next one to touch on, my brother, is foreign exchange. This is an interesting one.
Okay, before I speak about that, bro, speaking about what you're saying, it's very interesting. And
yeah,
so the people out there, it doesn't take a lot of money to invest in stocks, man.
Yeah.
As you said, with Easy Equities, you can start like with minimum 5 rand, right?
No, bro, like 20 cents.
Imagine 20 cents.
20 cents.
So
to deposit maybe from your bank to them, maybe the minimum is R1 because they need whole numbers.
Yeah.
But investing, like,
so it's not a train smash, guys. You know, it's something we want y'all to grow into. You know, but yeah, speaking about forex, I've been doing forex for a lot of years, man. You know,
shout out to you.
Forex is basically called foreign exchange. You exchange one currency for another. That's why they called in pairs, and not just only one, right? Just for example, Euro USD is in pairs, right? So if you sell, for example, the euro, you buy the dollar, right? Or if you buying the dollar, you selling the euro. Basically,
they work hand in hand.
Yeah, they work hand in hand. Exactly.
Yeah.
So it's all about that exchanging one currency for another. And forex exchange, forex has two types of things. It has basically three, right? It has the technical analysis, fundamental analysis, and then something we call is sentimental analysis. Sentimental analysis I'll explain first because not a lot of people know about it, right?
This is so good.
Sentimental analysis is where people join together and speak about where the markets will head, right? Basically, they try to manipulate the market by listening to some other person who's probably an expert or a group of people telling them, okay, Euro USD is going to be a sell, right? Or NZD USD is going to be a buy, or volatility is going to be a sell or buy, whatever, you know what I'm saying, right? Then we focus on fundamental analysis. Fundamental analysis is where you trade news, right? That's where you focus on your economic growth, your GDP, your interest rates and stuff like that. You kind of like check your work and see how the economy is working, and then you compare each currency towards that currency you're trading. So for example, if in America they're doing well, right, and they take out news as if they say that America is going to be lowering the interest rates. We don't want the interest rates to be high, right? Because the more it gets high, the more it loses value, right?
Yeah.
So if it's low, it's a good thing for people that are trading. Yeah. People that are trading to actually buy the dollar over the euro
and the economy as a whole.
Exactly.
It's a good thing.
Exactly. It's a good thing, right? Then we have technical analysis. Technical analysis is where you deal with charts, bro. Deal with things called candlesticks, Japanese candlesticks. Those red and green things they call Japanese candlesticks. If you didn't know, guys. You have your trend lines, you have your horizontal lines, you have your Fibonacci retracements, you have a lot of things that you can use. You even have indicators like stochastic indicators, RSI, relative strength index. Also have your MACD, moving average convergence divergence. That can help you basically to tackle the market. But I'm not a person who usually uses indicators. I just follow the trend, you know, because they say that the trend is your friend, right?
Yeah.
So a lot of people used to ask me which is better, to be a technical analyst or a fundamental analyst when you're trading forex. I'll tell them that both are important, right? To be a very successful forex trader, you gotta use both, bro. You can't be focusing on technicals only, right? You gotta understand what's going on within the world, within the economy, right? Like, you're telling me that you're gonna be trading the ZAR accounts without knowing what's happening
in South Africa.
Exactly. You know, you might lose your money for that, or you might even get lucky by making money, but only for a short period of time. So it's important to understand the two, you know, and work with the two, basically.
Sorry to cut that. If y'all don't understand this right now, y'all still will. We're gonna have a separate video specifically referring to forex and breaking that down. So we're just giving a sort of an overall general understanding. Yeah.
And then a lot of people in this video would want to ask, where can I get the news? Should I be watching the news daily and stuff? No, you don't have to watch the news daily. You can download, there's an app called investing.com or Forex Factory, where you can track your news and stuff like that. And also tells you the important parts of when to buy and sell and stuff like that. So yeah.
Yeah,
That's
nah.
Forex, guys.
Yeah, that's definitely it. That's definitely it, yo. I just want to say one thing on Forex, yo. So basically, my brother just touched in. If just move right back into this video and really hear the sauce that he's gonna drop there. We will still drop more videos on that. But Forex is not a scam, guys. That's why you see me smiling here. I've been seeing this all over. Like, Forex is a scam. Forex is a scam. Forex is not a scam.
Forex is a scam.
Forex, you have to understand it. If Forex is a scam, this is what I'll say to you. Go to England right now and go try to give them rands. It's not gonna work. As soon as you're gonna get there, they're gonna be like, yo, we're gonna need our currency here. We're gonna need pounds.
Even banks are trading, bro.
Yes.
Why would you call it a scam?
Yes.
Banks are trading.
See, I get up. It's not a fig lab. Like, I just I wanna deal with this myth. Like, it's not a scam, guys. Forex is not a scam. Go there and try to transfer that money. Uzobona ukuthi you're gonna need British pounds.
Yeah.
By you taking the value of what's in your bank account, that amount, whether it's 10,000 or 50,000, and you're saying, I wanna have British pounds for this amount of rands.
That's foreign exchange.
That's exchanging foreign currency, which is foreign exchange, shortened Forex. That's exactly it. What people do on a more day-to-day level, they're not traveling up and down and going to get the value. What they're doing is they just analyzing the price of the currencies that they want to trade, that they want to buy or sell. That's what they're doing. Pela. Every single day, ask any tourist, anybody with stamps on their visa, if foreign exchange is a scam. You have to get a different currency. Not even going to England, bruh. If you're going here to Zimbabwe, where they use dollars. Zimbabwe, if you go there, you're gonna have to go get some dollars. And whatever the value of the dollars is at that time, that's what you're gonna be.
The Zim dollar is what they call it. Zim dollar.
Yeah. You know what I'm saying? I think now they use. I want to confirm this, but I think now they use the actual dollar. I think they don't use the Zim dollar anymore.
You reckon?
Yeah. But I think I read that somewhere. I could be wrong. Don't come after me. But anyways, come after me. Drop a comment or a like. You know what I'm saying? Do what you gotta do. But the point is, it's not a scam, guys, and don't let people deceive you into thinking it's a scam. What is a scam is certain individuals within the Forex trading industry who deceive people, promise them to give them information or to give them money that they're going to trade for them, a return that they're going to give them, and then they don't come through. Then they say Forex, those people say Forex is a scam. Forex is not a scam. There are scammers in every industry, like Mhlabe, even in fashion.
I can relate to that, bro, in terms of Forex, bro. I've been attending a lot of courses, bro.
And some of them didn't pay out.
Some of them didn't even come up. Some of them were selling courses that I already know, bro. Like, I've been investing in Forex for a very long time, reading a couple of books of Forex. And when I get to a point where I'm at a course, they telling me the very same thing that I know. And when I get into a room and if they say, do you have a question or so and so, I'd question them and they would see that I was a threat to what else, you know? So I was like, you know what, man, this is bullshit. Sorry, guys.
You wanna get demonetized.
So I had to like do it on my own, focus on working on myself and stuff like that. Because I wanted to succeed with Forex, and it's not that I am successful as yet, but Godspeed, bro.
Yeah,
it will happen.
It will happen.
You know?
So yeah, guys, I don't know if we should we hop into into the other two facts. You know what? We're gonna leave it at that. That's 3 things that they do not teach you at school. Those are 3 things that they do not teach you at school: foreign exchange, stocks, and the cash flow quadrants.
Basically, financial literacy, bro.
Financial literacy.
Yeah.
And we're
And
gonna be
another
speaking
thing-
about that a whole lot.
And another thing, bro, that I've forgot to speak about, right? That in school they like to change the context of some words, right? To fool the young individuals, right? For example, if you go into a dictionary and look up a word assets, they'll tell you something.
Yeah,
else,
touch on
something
that.
otherwise.
Touch on that.
But then
We're going further now. We're not stopping here. Actually, touch on that.
To be honest, bro, like assets is something that put money in your pocket, bro. Right? And liabilities is something that takes money out of your pocket. It's quite simple, guys. Like, you don't need to overthink it and stuff like that. That's why the rich are richer, because they focus on assets. If you look at rich people, you might see that they have a lot of cars and stuff like that, but are you more observant enough to be able to see that they have businesses that they take care of, real estates, for instance? They're building assets that will be able to pay their liabilities, which are what? Like cars,
The toys,
like
nice
yeah,
life.
the lives that you know what I'm saying. Yeah. So guys, you gotta kind of twist your knowledge on certain words
Yeah.
given by the educational system.
And shout out to Robert Kiyosaki for that too.
Yeah.
Because that's a fact. Like it's that simple. That concept comes also from Rich Dad Poor Dad, if I'm not mistaken, right? Yeah. Like, if it brings money into your pocket, and it's contributive to bringing money into your pocket, asset. If it takes money out of your pocket, liability. Like that's just what it is. So you can have pull up with a beast of a whip, and then you can put it under assets for your business. But if it's not making your business more money or contributive to making your business more money, it's a liability.
Same thing as, like, for example, bro, in this isn't we living in the 21st century? We're living in an information age where everything is accessible to everyone, right? During the times of our parents, bro, when they were growing up, they had a different type of a mindset, that is compared to ours right now, right? They believe that their house, like a house, is an asset. A house is an asset if it's bringing money into your pocket. But then if it's not bringing any money in your pocket, you're always paying for electricity, you're always paying for water, you're always paying for this and that, then it is a liability, right? Like, I'd ask my mother and my father, hey, Mom, is our house an asset? I'd say, yeah, it's an asset. I'd say, why do you say so? And it's like, because we have shelter, like, and can't be.
Yeah.
It's not putting money in your pocket, so it's a liability.
Yeah. So we the new generation, and that's why we are here to exist. We, not just us, but we, including the community within this, we are young and hungry. Let's get it. Yeah.
Shout out to Jeff Bezos, man.
Yes,
I love the dude.